Good afternoon, everybody. Welcome to the 40th session of Zentax class. So, thank you for each and everybody for joining this session. As you all can see, today's topic is don't miss the last date to claim ITC and other upcoming important due dates. So, under GST, ensuring compliances with each and every regulation of GST is very important, not only to avoid any late fees or penalties or even litigation, but also to not lose on potential benefits such as ITC. Now, today we've come up with a set of items to help you, especially in the month of October, now this month, October, and the next month of November, to ensure proper compliance of GST. So, without further ado, let's start with the session. As you all saw, the main topic was don't miss the last date to claim ITC. We'll talk about ITC and how could you have already balances of unclaimed ITC and etc. So starting with the basics, what is ITC? The definition of input tax credit is given under section 2, clause 62 and 63. And it's quite simple that input tax credit means the credit of input tax. And it also includes any tax paid by a registered person under CGST, SGST, IGST, UTGST, but it does not include tax paid under the composition levy. So in simple terms, if a registered person is paying tax on his inward supplies, be it under forward charge or under reverse charge, it pertains to his input tax credit and it should be used in the course or furtherance of his business. So now we have ITC, but we also have section 16, which talks about the eligibility and conditions to claim such ITC. Now, the very general condition is it should be used in the course or furtherance of business, subject to prescribed conditions, which are given in the other subsections of section 16. Now, this ITC will be added to the electronic credit ledger. Section 16, subsection 2 is all about the conditions to claim ITC. And following, as you can see on the screen, we have given some 6 conditions. They are possession of invoice, section 16, subsection 2, clause A. That is, the registered person or the recipient whoever is claiming the ITC should possess a valid tax invoice or a debit note or any other prescribed documents from the supplier. Now, the invoice or the document that the registered person possesses should be reported by the supplier in their monthly returns. So that is under section 16, subsection 2, subclause AA. Now, the invoice or the document, that should not be the only thing that the recipient should have. He should also have received the respective goods or services. Only then he can claim the ITC on the same. And the ITC that pertains to these goods or services should not be restricted under section 38. Now he has the documents, he has the goods or he has received the goods or services and there is no restriction. But still, if the supplier has not paid the tax, that is the registered person, the buyer has paid the ITC to the supplier, and the supplier should in turn pay such tax to the government. Only then the recipient can claim the ITC. And the recipient should also have filed his returns under section 39. So this is the conditions for claiming ITC under section 16, subsection 2. But today's topic stems from section 16, subsection 4, which provides the time limit for claiming ITC. Now, as visible on the screen, let's read section 16, subsection 4. It says, a registered person shall not be entitled to take input tax credit in respect of any invoice or debit note for supply of goods or services or both after the 30th day of November following the end of the financial year to which such invoice or debit note pertains, or furnishing of the relevant annual return, whichever is earlier. So put it in simple terms, a registered person cannot take ITC on the goods or services if, let's say, the invoice or debit note pertains to financial year 23-24. Now, the last date to claim ITC on such invoices or debit notes would be the 30th November of 2024 or the date of filing annual return, whichever is earlier. So, if the registered person is filing the annual return before 30th November, then such date would be the last date to claim the ITC. If the registered person is filing the annual return after 30th November, then 30th November would be the last date to claim the ITC is what is provided under section 16 subsection 4. Now, why would we have these unclaimed ITCs? Usual or general practice is to reconcile the purchase invoices with the GSTR 2B every month. And while doing so, you might notice some invoices which the supplier has not filed in his respective return and which is not reflected in your GSTR 2B. And in the subsequent months, due to some error or mistakes, you could have missed out on such invoices. You could have missed out the ITC on such invoices. And you could also have minute business expenses like bank charges, courier charges, etc., which would be insignificant at that time when the expense was incurred. But at the end of the year, it would accumulate to a significant balance, which would obviously helpful in reducing your output tax liability. So there could be cases like these which would help you, which would be the reason why you have unclaimed ITC in your books. Now, how do you ensure that you find out these unclaimed ITCs and claim them within the last date of claiming the ITCs? You should undertake reconciliation of your purchase invoices, that is your books and the GSTR 2A at the earliest, and make sure to find out the invoices missing in your books or in the 2A and intimate your supplier to file the same before the last date and claim it within the last date, that is the 30th November 2024. And make sure to keep track of all the invoices while reconciling 2A, and don't postpone it beyond 30th November, as 30th November is the last date, ultimate last date to claim the ITC. And if you are claiming it beyond 30th November or the date of filing annual return, whichever is earlier, obviously lots of you might have come across many notices under section 16.4, which is a very disputable issue going on in many courts and cases. So make sure to follow the timeline to claim the ITCs. Now let us understand this with an illustration. As you can see on the screen, for all the three cases, we have assumed that the annual returns have been filed after 30th November, let's say 15th December. So the first case is the date of invoice is 5th July 2021. That is financial year 21-22. So the last date would be the 30th November from the end of the financial year. So 30th November of 2022 would be the last date to claim the ITC. Now the debit note, the first debit note scenario one is the date of debit note. So before going on to this illustration, for debit notes, you might have a question as to, do we look at the date of the debit notes or the date of the original invoice to find out the last date to claim the ITC? The answer is, look at the date of the debit notes and not of the original invoice. So as given in these two examples, the first example, the date of the debit note is 5th April 2021. So the financial year is 21-22. And the date of the invoice is 5th Jan 2021. The financial year is 2020-21. So obviously the last date in this scenario would be 30th November 2022. That is the 30th November from the end of the financial year in which the debit note was raised. So debit note was issued in the year of 21-22. So the last date is 30th November 2022. Now in the second scenario, the invoice was raised on 5th Jan 2021. That is financial year 2020-21. And the debit note was issued on 5th May 2022. So the financial year of the debit note is 2022-23. Now the last date in this scenario would be 30th November 2023. So this, hope you understood these examples. So the next important aspect of GST compliance is Rule 37A. This talks about the reversal of input tax credit in the case of non-payment of tax by the supplier and re-availment thereof. As we saw, section 16 subsection 2 spoke about a condition where the supplier should have paid the tax on the supply made to the registered person for the registered person to have claimed the ITC. Now, Rule 37A specifically provides for a situation where the supplier has not filed his GSTR 3B return or paid tax, filed his return but left the tax. That is, he has not paid the tax on the supply made to the registered person. And also they have not filed or paid tax within the 30th September of subsequent financial year. So let's take financial year 23-24. That is, the inward supply relates to financial year 23-24. The supplier should have filed their returns, should have declared the supply in their returns within 30th September of 2024. If they have not declared or filed or paid taxes on such supplies, then the recipient will have to reverse the ITC on such supplies on or before 30th November of the subsequent financial year. That is, on or before 30th November of 2024. If the recipient has not reversed on or before 30th November, they are liable to reverse the ITC along with interest on such ITC. But however, if they have reversed it before 30th November, then they are not liable to pay interest as per section 50. Now, let's say, okay, the reversal has been done, but when can they re-avail the ITC? As and when the supplier is furnishing the form GSTR 3B and declaring such supplies, then the recipient may re-avail the amount of ITC. So this is all about ITC, which was left unclaimed, and what are you supposed to do before 30th November. So the next thing to be kept in mind is the electronic credit reversal and reclaimed statement. Till the ECRS statement was introduced, the taxpayers had always done manual reconciliations and declared the ITC reversals and ITC reclaiming. It was difficult on part of both the taxpayer and the tax officials, because for the taxpayers, it was manual reconciliation. Manual reconciliation is obviously going to be very difficult. But for tax officials, they could not track down as to the reclaimed ITC pertains to which reversal. Was it due to temporary reversal or whatever? That was an issue. So now the government came up with a statement or ledger similar to electronic cash and credit ledger, that is the electronic credit reversal and reclaimed statement, which helps any taxpayer to keep track of the ITC balance which was temporarily reversed and which could be reclaimed later. Now, this facility was made available for monthly filers from August 2023 return period, and for quarterly filers from the quarter 2 of financial year 23-24, that is from July to September 22-23. Now, what could be the situations where the credit needs to be reversed and reclaimed later? So as given on the screen, the situations could be, as per Rule 37, the recipient or the buyer of goods or services has not settled the purchase invoice amount to the supplier within 180 days of the invoice date. And as already we spoke about section 16 subsection 2, that is the conditions for claiming ITC, we saw that the recipient should have received the goods or services. It should just not be that they have only the invoice or the document. They should also have the goods or services, and the supplier should have paid tax on such goods or services to the government. So these could be the reasons, and it could the temporary reversal could also be due to auto-populated credit notes or any inadvertent errors or mistakes of claiming ITC by the recipient. So these could be the reasons why credit needs to be temporarily reversed and reclaimed later. Now, this ECRS, how does this help in keeping track of the ITC reversed and reclaimed? It promotes tracking by allowing the taxpayer to declare the date of ITC to be reversed in 4B2 and thereafter reclaiming it in table 4D1 or 4A5. But to enable this smooth tracking of ITC reversal and reclaimal, the taxpayer should report the opening balance as a one-time measure. So once the taxpayer reports this opening balance, the GST portal from the subsequent declarations of the taxpayer in the subsequent returns will keep a record of all the ITC reversals and reclaiming that is eligible for the taxpayer. Now, so the opening balance is to be reported as a cumulative ITC opening balance is to be reported up to the period of July 2023. That is to calculate till when do you have to calculate the opening balance? As on when do you have to calculate the opening balance is up to July 2023 the closing amount of ITC reversal or the reclaiming yet to be done up to July 2023 or the Q1 of financial year 23-24 for quarterly filers. For monthly filers, it is July 2023. Now, the government has reopened this opening balance reporting window from 15th September to 31st October. So if you have not yet reported the opening balance of ITC reversed and reclaimed, please go ahead and report it within 31st October, beyond which you will not be able to report the balance. And if at all you have ITC which is yet to be reclaimed, and if you have not reported the balance, it would mean that you don't have any ITC left to be reclaimed. And once you report this balance till 31st October, you also have an option to amend this balance, declared opening balance, till 30th November, beyond which even the amendment is not possible. So make sure to reconcile your ITC claimed, reclaimed, reversed, and arrive at the closing balance as on July 2023 and as on the end of the first quarter, and report it within the last dates. Now moving on to the next topic, it is credit note. So as we all know, credit note is an important document in GST which is issued by the supplier in case of any amendment in the original tax invoice. It could be issued, the key scenarios for when a credit note could be issued is when the goods are returned by the buyer. That is, the buyer is returning the goods due to any issue and the supplier is issuing a credit note. When the tax value has to be reduced or the original invoice value has to be reduced, the supplier in turn issues a credit note. Or if there is a deficiency in the supply of the supplier, that is the goods or services issued are found to be deficient, then even then the tax value or the original invoice value is to be amended, which on the supplier issues a credit note for the same. Now, issuing credit note is fine, but then till when can the supplier declare such credit notes? Section 34 talks about tax invoice credit notes and debit notes, and Section 34 subsection 2 specifically gives the time limit for declaring the credit notes by the suppliers. So let us read the same. Any registered person who issues a credit note in relation to a supply of goods, services, or both shall declare the details of such credit note in the written for the month during which such credit note has been issued, but not later than the 30th day of November following the end of the financial year in which such supply was made, or the date of furnishing of the relevant annual return, whichever is earlier. And the tax liability shall be adjusted in such manner as may be prescribed. So, in simple terms, the supplier should ideally declare the credit notes in whichever month the credit note was issued. But if they fail to do so, the last date for declaring such credit note is the 30th November following the end of the financial year, or the date of filing annual return, whichever is earlier. So, for example, if the credit note is pertaining to financial year 23-24, the supplier should have declared it in the respective returns in the year 23-24 itself. But if they have failed to do so, they have time to declare it till 30th November 2024 or the date of filing annual return, whichever is earlier. So each supplier should keep this in mind and declare the credit notes at the earliest possible, since 30th November is just around the corner. Moving on to the next topic, RCM liability and ITC statement. So reverse charge mechanism is where the recipient of goods or services pays tax on the same directly to the government instead of the suppliers. Now, what issue could arise in this is, it was difficult to keep track of the RCM liability paid and the RCM ITC that has been availed. And the government came up with the statement called RCM liability and ITC statement. Now, this captures the details of all the liabilities paid under 3(1)(d) of 3B, GSTR 3B, and the corresponding ITC claimed in table 4A2 and 4A3 of 3B for a particular return period. Now, this statement is applicable to both the monthly filers and the quarterly return filers. For monthly filers, this is applicable from August 2024 onwards, while for quarterly filers, it is applicable from July to September 2024. Now, how do you access this statement on GST portal? You should just log into the portal, navigate to services, then navigate to ledger, and you have the option to click on RCM liability or ITC statement. Now, just like electronic credit reversal and reclaim statement, you should also report the opening balance under RCM liability and ITC statement. Now, why do you need to do this is start with the opening balance, and then in the subsequent months, the portal, GST portal by in itself keeps track of all the data that you've declared in GSTR 3B. So for the opening balance of RCM liability and ITC statement, how do you arrive at the opening balance? You just have two options. It's either positive opening balance or negative opening balance. And positive opening balance is when you have paid RCM liabilities in excess of whatever you've claimed under RCM. So that is, you paid excess in table 3.1d of 3b, but have not claimed a credit equal to the same in table 4a2 or 4a3. So you have a positive opening balance. Now, when do you have a negative opening balance? Is just the opposite. You have claimed excess credit under table 4a2 or 4a3, but you've not paid the corresponding, that is equal amount of RCM liability in 3.1d of GSTR 3b. In that case, you will end up with negative opening balance. Now, for monthly filers, the opening balance should be considered till up to July 2024 return period, and for quarterly filers, the opening balance should be reported up to April to June 2024 return period. Now, for this RCM liability and ITC statement also, the opening balance is to be declared within 31st October 2024, and amendments will be allowed till 30th November 2024. So if you have a positive opening balance or a negative opening balance, make sure to report it within 31st October 2024. And if at all you miss reporting this, you won't be able to go back and report any balances under RCM liability and ITC statement. It will be automatically deemed that you have no balance. And if at all you've declared the balance, and if there are any amendments, make sure to amend it before 30th November 2024. So this is about it about RCM liability and ITC statement. Now moving on to form ITC 4. Now form ITC 4 is a form in which details of goods sent or received from a job worker is declared. Now what is a job work? It is given under section 2 subsection 68. It is any treatment or process undertaken by a person on goods belonging to another registered person. So in simpler terms, a process or treatment is undertaken on goods by a person who's the job worker, and those goods on which a process is being undertaken belongs to another registered person, also known as a principal. Now, this ownership of goods on which process is being undertaken, it does not shift to the job worker. Also, should the principal just be a manufacturer? Can't he be a trader? No, he can be a trader too, as the section only says registered person and not manufacturer in particular. Now, when can you claim ITC on this job work, a goods sent on job work? The goods sent on ITC and goods sent on job work can be claimed irrespective of the goods have been sent from the principal's place of business or directly from the supplier of the principal without going to the principal's place. ITC is allowed in both the cases. Now the principal has sent the goods for job work. He should ensure to maintain proper accounts and records and issue a challan for each dispatch made to the job worker. Now the details of this challan will be declared and filed through form ITC 04. Now what are the details that has to be given under ITC 04? The goods which are dispatched to a job worker, or which are in turn received from a job worker, or the goods that are sent from one job worker to another, or the job worker in turn after processing and treatment is sending the goods directly to the customer from his place. So in all these situations, ITC 04 is to be furnished and filed. Now what is the due date for filing these ITC 04? For taxpayers whose annual aggregate turnover in the preceding financial year is above 5 crores, they shall furnish ITC 04 once in 6 months. Now for taxpayers whose annual aggregate turnover in the preceding financial year is up to 5 crores, they shall just furnish it once a year, that is annually. Now for this year, The upcoming due date is on October 25th. That is for businesses with annual aggregate turnover in the preceding financial year exceeding 5 crore must file ITC 04 half yearly by October 25th for the half year of April to September 2024. So now this is it about ITC 04. Moving on to the next important due date is GSTR 9 and 9C, that is the annual returns and reconciliation. Now, filing of GSTR 9, as you all are very well aware of, is mandatory for all registered taxpayers whose aggregate turnover exceeds 2 crore in a financial year. For taxpayers whose turnover does not exceed 2 crore, they can opt for voluntary filing. And GSTR 9C must be filed by taxpayers whose aggregate turnover exceeds 5 crore in a financial year. So for the financial year 23-24, the due date for filing these returns will be 31st December 2024, and it is advisable to start working on the same at the earliest possible to avoid last minute rushes. Now, if at all you miss filing it on the due date, what could be the consequences? You will be charged with late fees. That is, CGST would be rupees 100 per day of delay. SGST is rupees 100 per day of delay. This means a total of rupees 200 per day, and it would be capped at a maximum of 0.5% of the taxpayer's turnover in the relevant state or union territory. So that would be 0.25% of CGST and 0.25% of SGST. Now there is no specific provisions as to say the late fee for GSTR 9C. But if at all you have filed your GSTR 9 and you have not filed your GSTR 9C, you could be subject to a general penalty of 25,000. So these are the due dates for GSTR 9 and 9C. And finally, let's talk about invoice management system. As you all are aware of this new introduction functionality introduced by the GST portal, this will help the recipients to manage their invoices more effectively. Now, as we mentioned, this is a new functionality. It allows the recipients to review and take action on the invoices issued by suppliers, that is their inward supply or the invoices on which purchase invoices, before they become part of 2B and ITC claims. Initially, the recipients had no control over the invoices appearing in their 2A or 2B, and they had to do a manual reconciliation at the end of the year, which was very difficult. But now every month or every quarter, they can themselves go accept or reject the invoices which pertains to them or which is not theirs. So this allows them to only claim ITC on genuine invoices which are pertaining to their own purchases. Now, how does this work? Once a supplier saves any invoice in the GSTR 1 or invoice furnishing facility or GSTR 1A, it will be reflected on the IMS dashboard of the recipient. So now the taxpayer can then take the actions of accept. Once they accept, it will automatically go to the GSTR 2B and also be reflected in their GSTR 3B, that is under the eligible ITC table. Now, once they reject, this ITC will never be displayed or reflected in their eligible ITC in GSTR 2B. Now, pending, the recipient can group the invoices under pending to come back to it later and decide on it, but make sure that the recipient is taking an action before the last date to claim ITC as per section 16.4. That is, as we saw earlier, 30th November of the from the end of the financial year to which the invoice pertains to, or the date of filing annual return, whichever is earlier. Now, if at all a recipient takes no action, now it will be considered as deemed accepted and it will be moved to the 2B of the recipient, and it will be part of the eligible ITC of the recipients. However, if the supplier is making any amendments before filing their GSTR 1, the amended invoice will replace the original invoice on the IMS dashboard, and based on the action of the recipient, it will be reflected in the 2B. But if the supplier is making an amendment after filing GSTR 1, that is through their GSTR 1A, both the original and the amended invoices will be reflected in their IMS. what can the recipient do if they have two invoices? They can only claim the invoice ITC on the original invoice in the current month. If they want to claim the ITC on the amended invoice, they'll have to wait till the subsequent month. But make sure that they take an action on the original invoice before acting on the amended invoice. So that is important. That is, the original invoice has to be rejected and before acting on the amended one. So this is all about invoice management system. Also, there is actually the recipient. How do they know which invoices have reflected and which is not reflected? A draft GSTR 2B will be available on the 14th of each month based on the actions taken in the IMS dashboard. Okay, once the draft is available, draft GSTR 2B is available, does it mean that they cannot act on any invoices anymore? They can act on any invoices. That is, they can accept, reject, or move it to pending till the recipient is filing the 3B for the month, their own 3B for the month. If the GSTR 2B is generated and buyer takes any action other than accepting it, then the buyer needs to go back again and compute the 2B again. Once 3B is filed, all the accepted or deemed to be accepted invoices will be moved out of the IMS dashboard and only the pending invoices will be kept, which the recipient has to act upon before the last date of section 16 subsection 4. Now, what should the supplier do in terms of the action taken by the buyers? The supplier has an option to view the action taken by the buyers, that is, have they accepted or rejected. Now, if at all this recipient has rejected any invoices, the supplier can go back to such invoice, correct the details, and re-upload them. And before filing the GSTR1, the supplier should diligently keep track of the actions of the invoices by the buyers. And if at all they have filed their GSTR1, but they are yet to file their GSTR3B, the supplier should keep track of the action and file amendments through GSTR1A. Now, if the credit note, the supplier should also make sure of the treatment of credit notes, because if the recipient is rejecting the credit note, it will add on to the liability of the supplier. So that is it on invoice management system. So we have covered the important due dates to be considered by everybody in the upcoming 3 months, that is the October, November, and December. If at all any doubts, please put up in the comments section. We will get back to it on shortly. So we've got a few questions. So Ilangovan sir has asked, ma'am, GSTR 3B within 30th September, is it correct? Sir, I'm not getting your question. Please reframe it. But if at all it means you're asking as in, should the supplier file GSTR 3B within 30th September as per Rule 37A? It should be possible because they have missed filing it in its respective due date, and within 30th September they should file it in whichever written their 3B written. They should declare the invoice in whichever 3B written they are filing and file that particular supply. Please, if I've not answered your question, please put up the question, reword the question and put up, please. So the next question is. Service related to 22-23, supplier raised invoice as on date. Okay, that is, the invoice was raised on financial year 23-24. Can we account and avail ITC? Sir, I think it should be okay to account it and avail ITC on the same. Now, the next question is, how to RCM method in rent case? I think the question is, what is the applicability? Or so for properties other than residential property, rent paid on properties other than residential property, if the supplier is an unregistered person and the recipient is a registered person, the recipient should pay GST under RCM. So Mr. Mohanraj has asked, can we amend the status of input invoices once fetched? Sir, do you mean the invoices you have already taken an action and it has been reflected in your 2B. I think we've covered this in the PPT. We have told that till you file your 3B, you can continue to take actions. But however, you have to recompute your GSTR 2B again. Please put up any further questions. We'll answer them. There is a question on renting of immovable property. Can we take ITC? So, sir, if it is used for business purposes, yes, you can claim ITC. Now, the next question is, can we take ITC for the expenses made for the company? So, please refer to section 16, subsection 2. So, the ITC can be taken subject to section 16, subsection 2. Please refer to the same. So the next question is, what is the rate of interest for declaring sales invoice at a later date? Sir, I think it is 18% per annum, but please do recheck on the same. The next question is, can we reverse a sale invoice in case the recipient has not paid beyond 180 days? Sir, I think you mean the supplier has already filed his returns and paid tax on the invoice, and the recipient has not paid the amount to the supplier. It is not possible to reverse the same, sir, as either the government expects either one of you to pay the tax. The next question is, if we incorrectly filed ineligible ITC in your GSTR return, how to correct this in the subsequent months? Sir, I think this would be possible only by reversing that ITC with applicable interest in the subsequent 3B returns. We have two questions which have the same meaning. So the questions are, my customer rejected my invoice from his IMS dashboard. What will be the impact to me as a supplier is one. The second question is, once we are rejecting invoice in IMS, what action will be there on part of the supplier? So, sirs, to answer both of your question, once the buyer is rejecting the invoice from his IMS dashboard, the supplier will have to recheck the details and follow with the buyer, because he has to recheck the details and upload it again, either before filing GSTR1, or if he has filed his GSTR1, he can amend it in his GSTR1A. This should be the action on part of the supplier. Now, there is another question asking, online purchase mobile eligible to ITC? Sir, make sure that once you're capitalizing the amount, that is the ITC also, that you're not claiming depreciation, etc. But other than that, yes, you can claim ITC. So if that's it, if you all don't have any questions, or if you have any further questions, please mail it to the mail ID available on the screen, or you can also get in touch with the numbers provided on the screen for any further queries or doubts. So thank you all for attending this session and keeping it going throughout the session. Thanks once again.